Hello everyone, welcome back to another episode of The Market Only Goes Up. In today's video, we're going to take a look at what the next steps are for the market. We're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the 10-year yields, the 20-year yields, all that good stuff. And without further ado, let's get started with the video. First and foremost, we've gone up 9 days in a row on the NASDAQ and 8 days in a row on the S&P 500. So that begs the question, is this the best time to start going long? Probably not, unless you want to get so here, like, this is the reason why we're essentially going short overnight. So we're currently in SPY puts and NASDAQ puts for November 17th. And essentially, even if we do gap up, it is what it is. We're going to have a stop loss. Trades are trades. But an overextension like this is not really going to sustain itself. I understand I sound like a broken record, but it's also been the same exact concept for the past few months. If you guys are new to the channel, you guys know that even as we fell like this entire time, I was leaning long. And then as we fell, let me just remove the fib level. And as we fell during the end of October, as we fell down here, I was leaning long regardless. We could have kept on falling lower. I was still leaning long. So you have to trade the market as if it's a wave. You have to flow. You have to flow with the market. So currently we're short overnight. Whether it works or not doesn't really matter. But thinking about this logically, is now the best time to start going long. At a level of resistance on the SPY, we're at 437.67. The NASDAQ is 9 days in a row to the upside. This is not something that is sustainable to the upside. And that is my main bias. And if you remember, if you guys were watching the YouTube videos earlier in the week, I was saying every single video that if we are above 437 on Wednesday, I'm going to go short. So I stick to that. Currently short for that reason, because I was expecting a bit of a pullback towards the end of the week. So if you guys remember my video on Sunday, I was saying that we were going to have a bearish end to the week. That would mean either Thursday or Friday. So we're going to see how that goes. What's interesting tomorrow, we have Mr. Powell giving a speech tomorrow at 2 p.m. So we have to see how that affects the market. Next, this is a chart of the NYMO. We look at this to see overall strength or weakness in the market. And I overlaid it with a chart of the SPX on top here. Okay, so you can see that first of all, when the NYMO flips red, the momentum is bearish. When it flips black, momentum is bullish. Okay, so currently from November 3rd, the momentum on the NYMO became bearish. And you could see that right here, we ended up touching close to January. So what I want to do is just show you guys every single time that we've hit this high on the NYMO, what ends up happening in the market. So back here in March, basically this is to show that we get some sort of a pullback. And this is another reason why I'm short overnight. So right here, back in March, if you look at the price of the SPX, you can see that we pulled back right here, right? Back in January, over here, this is the price of the SPX. We ended up pulling back, okay? We, over here in October, we ended up pulling back, right? Over here in August, we ended up pulling back. Back here in July, end of July, also pulled back, etc., etc. We pulled back over here in May as well. And this is basically showing that we hit a solid level where we shot up a lot of strength in the market these past few days. Obviously, we are up multiple days in a row, but that doesn't mean that we're not going to get a bit of a pullback. I've been saying that we're going to get a bearish end to the week, and this is what I've been, this is setting up for a situation where I would be correct. So the other thing here is this is a chart of the SPY, right? This giant move to the upside. When you start to have a bull flag slanted upwards, that is not something that can sustain itself. When you see this setup on a 1 minute time frame, this is a really bearish setup. You can go short this setup. And the other thing is, even if we make another high, you go short that high as well. Because this, in and of itself, this setup, where we're making a bull flag and slanting upwards, not bullish. What you usually see on a bull flag is it slants lower, right? Which gives it a sort of a wedge, a falling wedge that can occur, or, you know, a triangle, things of that nature. But when you see a flag slanted upwards like this, it doesn't really sustain itself. So that, you know, I would be, you know, I'm expecting a bit of a pullback overnight. I could be wrong, but, you know, things are leaning that direction. So now, in terms of the large tech stocks, there's not that many signs of, so granted, right, I'm being fair here, there aren't that many signs that the market is going to give up. Okay, so Nvidia, we cleared this uptrend line and we closed above it. Tomorrow, the level of support for the uptrend line is going to be 462.40, and Nvidia clearly looks strong. Okay, AMD, we had a bit of a doji at after a 21% move to the upside. So, you know, I guess that's a good long opportunity for people as well. I'm being sarcastic. That's not a good long opportunity. Google is filling the gap. It's continuing to try to gap up and continue to fill its gap. And Google is doing its thing. Microsoft is also doing its thing. It is just skyrocketing. It has no reason. I mean, it doesn't even want to pull back anymore. This has to be like one of the ridiculous moves of the year so far. This is really, really strong, which is really interesting out of Microsoft here. Let's take a look at Amazon. Amazon giving a bit of a top after another 21% move, similar to AMD, which is, you know, a great buying opportunity, right? Meta is also doesn't look that weak. Apple also doesn't look that weak. You know, it closed above the prior level of resistance here from October 12th, but now it has a major level of resistance from this September low. And then, you know, we have to see how it responds at 184. So we're right around resistance on Apple, granted, right? So I guess, you know, like after a major move to the upside, guys, like after multiple days to the upside, you have to go long at resistance, because that's apparently what is on everyone's mind, right? Again, being sarcastic. But what we're seeing here is most of these tech stocks, they're not showing immediate weakness. The only stocks that are showing immediate weakness are the ones that are sort of consolidating or failing to break above levels of resistance. So, for example, Tesla, Amazon, and AMD. Those are the only ones that are really showing sort of signs of a bit of weakness, okay, to be fair. So, now let's just go ahead and take a look at the VIX. Obviously, the VIX is going to do the opposite of the SPY because they have an inverse relationship. So if the VIX is falling, that's generally good for the market. And as we can see, there's 8 red days on the VIX, similar to the 8 green days on the SPY. What is interesting here on the VIX is the Bollinger Bands are just pointed lower. So if the Bollinger Bands were starting to squeeze, right, this would denote that there would be less room to the downside on the VIX. But because the Bollinger Bands are pointed lower, there is still a lot of room to the upside on the market, or meaning there would be a lot of downside on the VIX. So that's, you know, we got to keep an open mind to that. But yeah, that is pretty strong overall for the market so far, you know. Let's take a look at the bonds. So the bonds have a bit more correlated relationship to the market. If the bonds are doing well, then that generally means that the overall market should also be doing well. So what's interesting though is now the bonds are the most overextended in terms of algorithmically. in terms of the Bollinger Band. So we closed outside of the upper level of the Bollinger Band. This doesn't mean that we can't continue going up, but it does mean, you know, we finally got to close outside of the upper level, which is starting to show that we're starting to get a bit overextended. We could get a bit of a pullback. It might not be tomorrow, might not be the day after, but it's getting there. So what I don't want anyone to do is I don't want anyone to become a late bull. Being long here is the equivalent of being a late bull. So going newly long over here is absolutely the equivalent of trying to short down here. Okay, if you guys don't understand that, then you're gonna learn, but please don't learn. Okay, it's not safe, and I'm willing to, you know, take the brunt of any sort of criticism that comes my way. But I'm telling you guys, it's better safe than sorry. You would rather wait for a pullback before going long. You don't want to go long into a level of resistance where we clearly have had some trouble crossing above. The 437 level is a major level of resistance. What is your target to the upside if we go up? Okay, there's a lot of people talking about 442. Great. 442, 444. Even if we gap up and maximum pain to 447, you have this entire area to basically be short. That's my thought process, because this entire move to the upside is your risk for basically going long, right? So this is, if your target is only this much, but then the move already happened this much, this is essentially a very, very small, it's a very small percentage gain that you would get in terms of risk reward. That is why you either lean short as we continue up, and that's what I'm doing here. This is a perfect level to go short. Perfect textbook short opportunity. 8 days in a row on the SPY, 9 days in a row on the NASDAQ of green at a level of resistance, and the bonds are overextended. The NYMO hit multiple levels of resistance. We got some swings for, we got some swing puts for 9 days out. Nice and simple. If this doesn't work, it is what it is. You know why? Because during the day, we end up scalping regardless. And this is just a reminder for everyone before you guys get crazy in the comments. I still give my trades live on the app completely for free. We shorted this absolutely perfectly. And then during the day, again, during the day at 10:15 a.m., we got into puts again. And this ended up, you already know what happened. So, and the reason why we entered short during the day was because earlier in the week and the multiple videos earlier that I said, if we're trading above 437 on Wednesday, I'm getting to swing puts. So what happened was, got into the puts over here. We ended up getting really, you know, we got a huge move to the downside. So I took profits. And then at the end of the day, I re-entered. Nice and simple. That's how you trade. You don't, okay, congratulations, I think that we're going to fall. We did fall intraday, so I took profits, okay? And then we bounced back up, and then I re-entered short. That, like, it's the same bias. So I re-entered short at a better price, okay? So it is what it is. If we end up flying higher, today's profits, you know, we'll end up, today we made a lot of profit. We shorted the crap out of the market. Regardless of which direction the market goes, we look to make money intraday. And this is my bias. I am short swinging overnight. And I really think that we're going to see a bit of a downside move towards the end of the week. And just now every day that we have a green day, I'm just going to lean short. Because as you saw in yesterday's video, we only had 11 days in a row where we were green. If we're green tomorrow, I'm going to lean short again. And then if we're green again on Wednesday, so this is 1, 2, 3, 4, 5, 6, 7, 8, right? if we're green on Thursday and then Friday, that would make 10 days in a row. Are you going to go long then? After 10 days? No. You're going to have to keep on leaning short, right? So now it just becomes a matter of managing your portfolio and managing your risk. The whole point now is, regardless of whatever bias you have, any single with trading in general, any single bias that you have to have enough ammo you need to have enough ammo to play that bias. You don't want to just have a bias, full port your portfolio all into one direction, and if it just doesn't go in your way, after one day you lose your entire portfolio. That's not how you trade. Okay, you want to have enough bullets in the chamber to take multiple trades. You want to be able to be wrong. Okay, and that's the thing. You have a bias, congratulations, but the most important thing is managing your risk. There are tons and tons of people that are geniuses. They are genius level minds, genius level thinkers, but they have shit risk management. Absolutely terrible. So those people cannot be traders. They are analysts. If you want to be a trader, you need to manage your risk. You need to manage your portfolio properly. You need to take this very seriously and look at this as a business. You never over allocate yourself towards any single position. You never over allocate yourself towards any direction. Okay, that's my thought process. God bless. Hope this works out. If we open up red, just know that I'm gonna be pretty happy, and tomorrow is gonna be a much easier trading day because we're gonna just play around in profits. So right now, actually, the puts should be doing well. Hopefully, we end up opening below 436. That would be the easiest. That would be spectacular, but no promises. Anyway, we stick to our guns, and yeah, it is what it is. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I love you guys. See you guys tomorrow. Thank you.